But moving from here on, consumer electronics manufacturer Blue Star is in focus as well. Overall, if you go to see with regards to where the festive season is concerned, how that has panned out is going to be interesting to watch out for. In fact, the stock is seeing gains of almost 1% as we speak. And to discuss this further, B. Thiagarajan, Joint MD, joins us on the show. Welcome to the show, Mr. Thiagarajan. To start off with, firstly, overall, Q2 was slightly somber for the consumption space. Now, if you could just help us understand, how has the entire festive season panned out for your company?
Consumption story continues. Festival season generally starts with Onam, but due to Kerala floods, Onam was not good. But post Onam, till Diwali, market has done extremely well, and I think it will continue to do well till New Year. And in South, it is actually Shankranti, it is called. I think it is going to be good for the coming months as well. To put the numbers in perspective, there was a fear that with the rupee depreciation, petroleum prices, commodity prices, there was a custom duty hike. With all that, the market will not do well. We witnessed around 15% growth as far as Blue Star is concerned. My estimate is that the market would have also grown by around 5%. We would have grown faster than the market. And I think this trend will continue.
Right. So the trend is expected to continue with regards to growth. Now, the expectation is that post-elections, the government and infra spends are expected to increase. However, the kind of liquidity crunch that we've seen in the system, that is keeping the real estate sector under check. Now, will that have any impact on your business and your sector?
I do not think so, for the simple reason, there are 2-3 factors. Let us imagine. One is the election. This keep happening once in 5 years. We are supposed to be, coping with that. I don't think it is a very major event as far as the businesses are concerned. The demand is going to be driven by the capacity expectations or the capacity expansion the manufacturing units will ask for or the corporates will ask for. So our major segments are offices. So therefore, I think this demand is going to be good irrespective of the elections. Even if the election is going to affect, it is for a couple of months. So therefore, I am not at the moment worried about the elections. Second thing, as far as the central air conditioning space is concerned, there is a very vast market segment that is available for us to focus on. Number one is the infrastructure, like the airports, metro railway, so on and so forth. That particular space, many investments are taking place across the country, and it will be continue to offer good growth opportunities. The second one is the factories and manufacturing units are supposed to happen. For the past few years, capacity expansion did not take place, so we are witnessing certain inquiries beginning to take place. The third one is the offices, which is directly proportional to the employment generation. So each corporate sector employee will generate around 60 to 75 square feet of air conditioned space. That demand is entirely dependent on employment. We are seeing good signals there that the employment generation continues to happen in corporate sector. And the last one is light commercial spaces, shop, showroom, boutiques, restaurants, blah, blah. There, the growth is very high even today, that we are witnessing at least 15% growth in that segment, specifically in tier 3, 4, 5 towns. So therefore, I am not pessimistic about the prospect of market slowing down during elections. Not at all. There are enough opportunities in the marketplace. The second aspect is with regard to NBFC funding to the real estate sector, whether therefore new spaces will get created. This is something which we have to wait and watch. So far it has not happened. I am not seeing construction activity stopping due to NBFC financing. So far it has not happened. We have to wait and watch. Now, as far as Blue Star is concerned, we are very clear. We want to be in select large projects and medium-sized projects where the cash flow is good, the job completion time is less than 18 months of a time. So we are doing extremely well with this strategy.
Right. So overall, you're not seeing a major impact of this, but you have mentioned right now the focus is going to be with regards to revenue growth, profit improvement, and productivity is concerned. What is the kind of number that you're looking at?
It varies from segment to segment. So if you are looking at the cooling product segment, there we have to ensure that we are building scale by growing faster than the market. In terms of the profit margins, we are looking at least 200 basis points improvement we should achieve there. So in the past few years we are somewhere between 9.5 and 11.5, and our goal will be to reach somewhere around 14%. In case of segment 1, that is electromechanical projects and packaged air conditioners, the operating margins level should ideally in about 3 years time, if we can get to 8, we will be very happy. And this here again, it is going to happen through a combination of strategies. Number one is we will be into design build projects, specifically in sectors such as factories, pharma, so on and so forth. And in the last segment is the professional electronics, at the Blue Star Engineering and Electronics portfolio, where it is directly dependent on the capital investments, whether it is testing, medical, so on and so forth. There already the turnaround is happening, and I think in the coming years a lot of investment should be taking place. Look at the many sectors. The airports are already becoming crowded. The hotels, you just do not get it at all. Convention halls are in shortage. Hospitals, many will have to be built. I think in terms of construction, we have only 1/3 of what is required. 2/3 construction will have to happen. So in the next 5-year time, I think it will happen.
Right. Overall, with regards to where the EMP business goes, what is the kind of current order book and what's the kind of FY19 closure you're looking at with regards to order book?
Quite a few orders are expected to be closed. A few metro railway orders are on the anvil. These are all whether we will be successful, not successful, but given the fact that we command close to 30% market share, I think we should be. The carry forward order book should be in excess of 1,500 crores for that particular segment. In the next financial year, our attempt will be to cross close to around 1,000 crores of billing, which means around 2,000 crores of carry forward order book will be a comfortable level.
Right, 2,000 crore worth of order book will be a comfortable one with regards to carry forward. And very lastly, we spoke to Symphony as well, who mentioned that they take price hikes every fortnightly. Now, what is your policy? Because overall, we've seen a 5% price increase that you've taken in the second quarter, to offset the kind of impact that we've seen on the back of rupee depreciation, higher customs duty, as well as higher input costs. Now that the festive season is behind us, are you looking at initiating any further price hikes?
We increased the prices by around 5%, but depending on the market condition, quantity, etc., I think there would have been a dilution of around 2 to 3%. So, since the rupee has strengthened, I have a feeling we should be content with around a 3% price increase. And we will review this once again in the month of January.
Mr. Thiagarajan, 3% price hike that could be on the anvil, which will be once again reviewed in the month of January as well.